Okay, welcome back. Well, for now, the market is not too bad actually. It's still down about 150 odd points, but holding around that 17,600 level. The mid caps have recovered in a big way, so don't lose sight of that. In terms of big stocks that are moving up, a lot of the consumption stocks, even in the mid cap arena, are looking pretty good. So you have some double-digit moves. Look at Dish TV; it's up 20% right now. You have something like Ashok Leyland, of course, that's up almost about 4%. Zomato is up about 4%, and a couple of other names like Bank of Baroda, SBI, etc., doing pretty well. But let's talk about the financiers now. Umesh Revankar, the Vice Chairman and Managing Director of Shriram Transport Finance, joins in. He's going to tell us a little bit about demand and the business outlook as well. Mr. Revankar, good afternoon and thanks for joining in. This whole commercial vehicle space has picked up in a big way. Yesterday, Ashok Leyland was telling us that not just infrastructure activity, but now there's big demand coming from e-commerce and logistics as well. Can you tell us how much of your business comes from the MHCVs, how much from LCVs, and also, what is the kind of pickup that you are expecting in disbursements because of this demand push?
Yeah, thank you. See, the overall demand from MHCV is predominantly coming from the infrastructure development, because wherever the application is for the infrastructure, the demand is very high. Especially the dumpers are categorized as a commercial vehicle. So normally the sales are coming from a dumper. And even some large vehicles, the demand has gone up, especially the 14-wheel category. Now there are some new launches, demand is coming. But the e-commerce demand is something is consistent. It is there for last 15 months. And consistently we are seeing the demand is coming up for new vehicles plus the existing replacement both. The new demand is coming added to the replacement. So I feel the growth in the e-commerce and the local last mile distribution will be much higher and consistent.
So when you say higher and consistent, can you give us some numbers? Now that, I'm just going through a report that JP Morgan has put out where they say that after a 4-year hiatus, disbursements are picking up across the board. And, a lot of auto financiers on an average have grown about 7% over the past 3 years. But in the heydays of that FY11 to FY19, the compounded growth was almost 17%. What do you think the compounded growth rate could be for your industry and for your own company over the next couple of years?
My sense is that 15% CAGR growth is something which we should expect for next 3 years in both heavy and all category put together. Because there could be some mismatch in our growth, because most of our growth statement would be on the disbursement amount, and the way the actual sales happens in units, number of vehicles. The vehicle prices have gone up significantly for the larger vehicle, especially the popular vehicle 14-wheel today costs somewhere around 47 to 48 lakhs fully finished on road, which was around 34-35 lakhs maybe 2 years back, 2 or 3 years back. So BS6, input cost, steel price, all have increased the price. And one of the reasons for delay in demand for the heavy commercial vehicle is the steep increase in price. That unless the economy is able to absorb it, it will not get immediately absorbed by the buyers. So heavy commercial vehicle will take some time to get absorbed and put into use. In lighter commercial vehicle, it gets absorbed fast because of increased e-commerce activity and also requirement of a last mile reach. So I feel the growth rate of the NBFCs, which is in the volume terms of disbursement amount terms versus the industry unit sales, there will be some differences for some time. But I think on average 15% growth is something which we are expecting. In our company, we are looking at around 12% growth on the commercial vehicle side.
All right, 12% growth on the commercial vehicle side. You spoke about disbursals and your optimism emanated from the strong disbursals that you have right now. 30% is what your disbursals grew at in the first quarter, but that somehow did not translate into AUM growth. The AUM growth was just about 9.5%, under 10%. Can you explain why exactly that happened? And, to that extent, what is the kind of overall growth that you're looking at this year?
See, comparing with the last year, same quarter, the first quarter will be a challenge because that was where the COVID wave 2 had hit. But otherwise, we are expecting a 12% growth for the company as standalone on the commercial vehicle side because we are focused on the used vehicle and the rural application. So application for which we are lending is little different from the heavy vehicle. Heavy and construction vehicle, we don't really lend on a new vehicle in a big way. So the volume growth or AUM growth will not come to us that much as the other competitor or other NBFC will get. So we are looking at unit growth, and we have targeted 12%, and we are confident of reaching that.
Okay, you said there could be a 15% growth overall in disbursals of CV financiers. Now you cater to both the segments, which is pre-owned commercial vehicles and new commercial vehicles. Can you just break it up for us? Where are you seeing the maximum amount of demand? Are fresh CVs, is that demand going up there?
We have a breakup of 10% in new vehicle and 90% in used vehicle, because we are focused on individual customers. We don't focus on fleet operators. So the new vehicle are typically purchased by fleet operator, and individuals are typically buy used vehicle, and sometimes they upgrade to new vehicle. So the customer whom we lend for new vehicles are typically who are upgrading from the existing used vehicle to the new vehicle. And sometimes in the last mile connectivity, people do buy new vehicles. So our focus area is totally different from what the market is.
Right. Mr. Revankar, let's move away from CVs for a bit and let's talk about the other parts of your business. The first one is, what are you expecting in terms of asset quality and performance for your non-CV business? And the second part, what's the timeline on the merger of Shriram and Shriram City Union Finance?
The asset quality by and large is good and improving, because the segment which we are lending, say a commercial vehicle or the middle income group, business group which we are lending, both of them are having good businesses, and the environment is quite positive even in the rural area. So we are witnessing improvement in the asset quality Q on Q, and I feel it will be sustainable. And I think we should be able to, in a standalone Shriram Transport, we should be able to maintain the net NPA, which is at around 3.5, around that. But the asset, the credit loss, we expect it to come down from around 2.5 level to around 2% by the end of this financial year. As far as the merger is concerned, the final NCLT of the meeting is on 22nd September. So we expect everything should, because all other approvals have come, we expect it by the September end, or maybe first week of October order. Then we need to go to ROC and all other requirements are there. So by the end of October, we should be fully ready. And even otherwise, internally, we are working for the merged entity continuously now, and we are fully ready to function as merged entity by the first week of October.
Okay. All right. Mr. Revankar, we'll leave it at that. Thanks a lot for joining us and all the best. That's Shriram Transport Finance. Let's slip into a quick break. On the other side, we'll put focus on the auto sales for the month of August and give you a quick snapshot on how things look this month around. Stay tuned.